We are now joined by Kevin Roberts, Director of Economic and Market Intelligence for Car Gurus, to help us make some sense of it all in probably what is one of the most impacted, if not the most impacted, subsectors of all manufacturing, that is this world of automaking. Starting broadly, and first off, thanks for joining us, of course, Kevin. How do you make sense of this as it's ever changing?
You have to keep on your toes in the current auto environment. I can't tell you how many times I've been updating our models of what we think the potential impact could be here. The good thing I will say is that we seem to be trending in a better direction now. With the two executive orders that were signed yesterday, it looks like we might not be seeing as much or as severe of an impact on the auto market as we initially were expecting about a month ago.
Okay, so I follow the auto market strangely close for someone that I do not own a vehicle, so it's just a personal interest of mine. But I also feel like the timing of these tariffs couldn't be less ideal for the autos. I mean, we were finally seeing some growth, some consistency, and then bam, hit with these expected tariffs. So, I mean, do you find that right now these companies were not in the best place to handle what could be a difficult pricing environment?
So I would say it's a difficult pricing environment for both consumers and automakers. So we were starting to get probably pretty close to what we consider kind of a post-COVID normal for new vehicle sales. Obviously, this is going to put pressure on the balance sheets for automakers. And for consumers, it's really going to affect affordability. It's a trend we've been noticing for a while now, that affordable vehicles are becoming much more of a challenge to find in the US. Vehicles under $30,000 accounted for only about 13% of listings in the first quarter. And obviously tariffs and increasing prices is going to make that even more of a challenge, which could then, impact vehicle demand as well and put downward pressure on sales. So it's an unfortunate timing for the tariffs to come on and increase prices, but we're seeing how the market's starting to adapt to that.
Kevin, when you look at this kind of on a medium to longer term, assuming that this kind of trend of deglobalization truly continues down this path, do you find it perhaps likely that we might enter a world within this space where companies like Ford and GM, even Tesla, that are a little bit more American-made, let's say, will do business here, and then companies like Jaguar will do business in Britain, and companies like Toyota will do business in Japan? Or will those companies simply just move their production facilities to service the different end markets so that they can still do business worldwide?
So I would say the U.S. market's already pretty diversified on the automaker front. In our Q1 report, we were looking at which kind of OEM has the highest to kind of lowest percentage of U.S. built production. So Ford is number one, but Honda, somewhat surprisingly, had the second highest percentage of U.S. built listings there. So you can't really take the automaker's home base as the kind of source of where they're going to be. And with the changes we saw yesterday, really trying to hone in on potential savings for automakers for U.S. built vehicles on the front of kind of parts tariffs on that front, and the reduction in stacking, there definitely is an incentive to build more vehicles in the U.S. if you're looking to reduce overall tariff impact on vehicle pricing.
Okay, and I know that many have been trying to find these areas to hide out in within autos and trying to find those more resilient. And I believe I've read some notes saying like CarMax, Carvana, or some of these auto part retailers, basically. I mean, do you find there are spaces that might be less tariff impacted and could see actually a benefit from this time of high volatility, high uncertainty?
I can't quite speak to that areas. What I can say is that the changes we saw yesterday are going to have, I think, a positive impact. The overall tariff impact on U.S. built vehicles is going to be significantly less than what we were expecting just a month ago. And so I think that's an overall positive trend for the industry.
Last thought here, Kevin, before we say goodbye. This trend of EVs versus internal combustion, traditional fossil fuel powered vehicles, are we hitting the pause button on that a little bit, or is this thing still rolling down the hill and snowballing?
So EV growth is still there. It's just not growing as fast as automakers had been expecting on that front. I continue to see EVs growing as a share of U.S. sales, but it's going to be a little bit slower than what expectations were a couple years back.
Okay, and great place to leave it. We so appreciate you joining us today and giving us that wonderful insight on what has been a topic all week long, and that is autos. Kevin Roberts, Director in Economic and Markets Intelligence at Car Gurus.